What's the moment, and it's very important, what the moment that price makes a new high, it's going to start decreasing in value. Higher high, I'll pull back down into those areas to make a higher high again. Because what you have in here is that once the moment, and it's very important, what the moment that price makes a new high, it's going to start decreasing in 166.70. Because if you look at the far right on my screen, it's in black. You see that it says 166.65.
Yep.
That's just where the highest high was at here. And we can go back and track and just do something like this. And you could just see that all we have here is I can write notes for myself. Okay. And these are notes that you can write for yourself as well when you're either learning a charts or backtesting a charts, is that all we have here is a high that pulled right back down. And the moment that price pushed back down here, look on how this candlestick, which is aka a doji, what does that indicate you? A reversal. Okay. A potential reversal to go right back up, because you can see on how the selling pressure has decreased, which is this one, decreased, decreased, decreased. And now what price just did here gave you an indecision, which is aka a doji. And within that doji candle, we can anticipate a reversal might occur. Okay. And you'll read more about that when it comes down to your candlestick Bible. Okay. Because all you should be focusing on is that candlestick Bible and the whole market structure, because you're just looking on how banks are bringing price right back up, and that's it. Because the moment that they apply this whole doji, look at the next candlesticks. What do you have? You have different forms of buy candles. That's what you have. And in this case, one bull candle, second bull candle, third bull candle, fourth bull candle, and that's off daily time frames. So remember, each day here represents one day. Okay, it represents one day of just impulse. Because on this day, on Wednesday, it gave you a nice rally to the upside. On Thursday, it gave you another rally up to the upside. On Friday, it gave you another rally up to the upside. And then until Monday again, another rally up to the upside. You see that on each day, they're not all going to give you the same amount to move.
Right.
They're not all going to be the same size. But what we do know is just money's coming in. That's all we know. Do we know how much? No, we don't. Okay. We don't have access to that information. Okay. And that's an important thing to know. We don't have access to that information. Okay. So all we know right now is price just made a new high and a new low and a new high. But when you see rallies like this, that's how you know money's coming in. That's it. And now that price made a new high, the moment that breaks structure, now you can expect a retracement right back down. Okay, something like this. That's what you can expect, is it push right back down and see something like this, because that's what you anticipate. Because RZ said that the moment that price makes a higher high, higher low, higher high, now we anticipate that this is going to continue going up, because we understand that the candlesticks here have made a new high, but these highs is coming from what? The doji. Remember that doji that we just talked about, because that right there indicates you that there were going to be some sort of reversal, and that right there closed on a daily time frame. Remember that it closed on a daily time frame, that doji. Okay, because we're not here on a 1 minute chart, 5 minute chart, 15-minute chart. We closed on a daily time frame, because whatever happens here on a daily time frame can happen anywhere. This can be a 1 minute chart, and it's still going to do the same exact thing. I must say on this 1 minute time frame is bullish, because the only difference from the daily and the 1 minute is that this is going to occur within a couple of days, but on a 1 minute, it's going to occur within 10 minutes from now or 15 minutes from now.
Yeah.
And uptrend. Okay, because at the end of the day, what the most important thing here is just on how you can read the price action, which is reading those candlesticks, apply that with supply, or apply that with structure and supply and demand zone. Because what I can say here is that you have your structure break and you have your demand zone in here. And now what you expect for price to come back down to is, this area in here. But remember, even though that this is a valid demand area where you expect price to come back down into, does it have to? No, it doesn't. because this is where retail thinks that, or one learning that it always has to retrace down to here to look for upside. But it doesn't have to, because price can come back down midway and then reverse right back up, just like I was mentioning earlier. Okay. Because you know that you're bullish. You and I have the same outlook that Apple is bullish. We see money coming in. We see that there is bullish candles coming in. But now we're not going to look for sells if this specific day was red. Remember this, because this is very, crucial. Because on this day, yeah, can pull right back down, but don't let it change your bias. Okay, don't let it change your bias, because if you're going to change your bias to now look for short, and you're not going to participate with your bullish outlook, then you can, overanalyze it and start looking at something else.
Gotcha.
So this is why we approach it with order flow, because order flow here is bullish, and if you participate with the trend, you're going to be safe. Okay, and we want to be safe because we want to protect our capital. We want to go with where the banks are pushing price up, is they're seeing this as a continuation. Okay, and now look at the next one. Look at the next candlestick. What does it show you? A sell candle. That's a full flush, because now price went from, let me just show you. Price went from, where's my thing? Date range. Oh no, not date range, price range, because I want to calculate the price. From here to here is $5. $5 of a downtrend from Tuesday to Wednesday. So the price on Apple decreased $5. So it went from 166.97 all the way down to 161.85. And that's a decrease. But again, these 2 days, they're going to be no trades for you at all, because you're just analyzing the way that the candlesticks are coming in, and how can you look for the reversal, just like the way it reversed here. So this is why I say it's very important to see on how price came back down, reversed in here, and it's all a new continuation up. And this is something where you can start doing when it comes down to charting on your own, and see on how you can do this same thing, because you can do this everywhere. You can do this on a 1 minute. You can do this on any time frame. Okay, so let's just continue. So now look at this. So now this here gave you what? A buy candle. It's not a sell candle anymore. So now price is pushing up. You see that price is now pushing back up to expect what? A continuation up to the upside. And remember, does price have to come back down to here? I mean, it can, but it does not have to. There's no set of rule or specific rule that always has to hit a supply or demand zone. This
Right.
is what we come
So
up.
you said, let me ask you a question.
Yeah, go
You
for it.
said and I've heard you mention this term on the Zoom. You said the term, you said that's a full flush, and then I heard you mention flush. So what do you mean by flush or full flush?
So a full flush is just meaning that the whole $5 move from here to here is a flush on a different time frame. Because if I
Oh,
was in a different time frame, these two candlesticks would show you engulfing candles like this. And we can go in a lower time frame actually and show you that. Because this is why I say it's very important to use these time frames to understand those candlesticks on how the orders are coming in and how the orders are leaving the market. Okay, because who's buying and selling here? The banks. That's it. Though they are the ones that create these candlesticks. It's these banks. Okay. So if we go onto a 4-hour time frame, look on how many candlesticks you have.
right.
Now
So
you're looking at
with the time frames, the candlesticks will change structure.
correct. Correct. And so that's just what, I was mentioning earlier, as in, on how on NAS 100, they gave you this breakout structure and it's pulling right back up. You can see that this was just making a lower high, lower low, and we're trying to make the lower high, but in here, it's already shifting from bearish to bullish again, right? Because that's a different story. That's a different context. Because you can see that on lower time frames, you can go much more in detail, and you can see on how those candlesticks are being printed. And on this case, what do you see Apple doing? It's coming right back up. You see this, a shift in price. And we can go onto a line graph, actually. Look at this, shifting. What does it give you? A double bottom.
Right.
And within that double bottom, what does that indicate you? a reversal. So this is why we work with timeframes, okay? Because if we don't work with timeframes, all we're going to do, here is just looking for breakouts off of this high, but you don't have to look for the entry above here. You can enter here because you're trying to make the higher low, right? Because what you see from a zoom out view is higher high, higher low, higher high, and all you're trying to do is make the higher low to make the higher high. So what it actually is something like this. So let me just show you. So look at this here. Oops, let me delete that. Not deleting. Yeah, there you go. So what it is when it comes down to structure or just candlesticks, again, structure is candlesticks.
Right.
So structure is candlesticks. So you have something like this. Okay. This, and now you have this. You see that? You see that this was just bearish, 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 and now you have a bullish candle, which is this engulfing. Okay. And within that engulfing candle, it's just breaking all these little, troopers, which is a sell, and now it's giving you a buy candle. And again, it's just making, when you look at these candlesticks, it's just making lower low, new low, never made a new low, came right back up, break structure. That's a new candlestick because this candlestick was stronger than these three, right?
Right.
And there you go. It's a reversal. So you should see that this whole time we're just learning candlesticks, but in structure formats, because that's just what it is, because it's much more simple.
Right.
Okay. So now if you go back into a candlestick chart, look at this. Each time frame on its own is different because the higher time frame stays intact that it's bullish, but on the lower time frame, it can shift from bullish to bearish, bullish to bearish. But all we see here in this area is this, what we just mapped out is bearish coming in, bearish coming in. The last low never came lower than this again. And what's the next candle? It came above this one, which is here. You see that? This candle, it closed above this one. You see on how that just, there's no
Right.
pressure anymore. Now there's buying pressure. Okay. And now what do we have? A reversal right back down. Okay. And again, this is fine because when it comes down to things like this, yeah, this is still bullish because we're still holding that the orders down here because we can say that this is a break of a structure, come right back down because there's orders in here that have to be left mitigated because that's just where supply and demand zone exist. And now what we're doing here on Apple is we're making the next candlestick to push right back down into here. So what you have here is something like this. So let's just make it red and let's just color these in and let's make it green. Okay. Let's make these red. Let's make these red. And let's make these red here. Okay. So all you have here is just sell, 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 sell. And this candle here, bullish. That's it. And now the next candle, it's bearish. And that bearish candle is still come back down into this demand zone, which is AKA this one here. That's a demand zone. Okay.
Right.
So now if we can go on a low upper time frame, that's what we have, a push up, a big buy candle, and look on how prices come back down. And we can continue. So let's continue.
Okay.
Look at this. It pushed right back up. It held that demand zone. You see that?
Yeah.
There you go. It held that demand zone and then it pushed up again. And then from there, you see that all price just did was just throw a big buy order. But this is what banks like to do. Okay. And this is just where we don't just fully focus on candlesticks, as in aka the candlestick Bible. I mean, yeah, it's good to know, but the most important thing here is to understand on how structures being formed, how there can be manipulation, aka liquidity, and how you can look for the reversal again. Because as a retail trader, yeah, you can have patterns like this. Oops. So let me zoom in. You can have patterns. Actually, let me just clear this up because that's in the way. Let me move that there. You can have patterns from this wick to this high. And just like what we saw here before all this played out was a breakthrough. And there's already traders in here looking for buys to go for that breakout. But this is where the banks like to fake you out And then once you start selling, and you can just see that the moment that that right there gave you a breakout just like this, a breakout, a lot of traders were already into that breakout, which is this one, breakout. And what did prices do within the next couple of days? 1, 2, 3, 4. This is 3 days of a rundown. They threw in a sell position, but again, these sell candles doesn't really matter to us. Why? Because we know the bigger time frame. It's bullish, right? So this is why we use structure first, and then we use the candlesticks as a confluence to see if this is going to reverse or not. Because
Gotcha.
we use these candlesticks to understand the orders. That's what you use these candlesticks for. Okay, you're not going to hear that anywhere else, not even on YouTube or nowhere else. But
Right. Yeah.
you're going to use these candlesticks to understand on how the orders are coming in. Either
Yeah, I
from
see. I see that you can't use the candlestick to determine where the price is going. And if you use the candlesticks only, just like the time frames, when you change them, then you're going to get a different picture.
correct.
And then that's how you can go wrong if you're only using candlesticks. Yeah.
Correct. Yep, correct. And so it's like when you combine them all, together, you're gonna have a great understanding on where price can head to, what's the next move, because that's
Mhm.
what SSE is it defines which is the next move to see higher prices or to see lower prices, and that's it. Because you already, you yourself, let's just say from a week from now, or maybe at the end of the month, when I give you this chart, what you're gonna do here is, okay, RZ, I have this high, I have this low, and I have this high. And now, right now, all I'm doing here is just trying to see if is this the higher low to take out this high to make a new high, just like that.
Mhm.
And that's just on how you see a continuation. Okay.
Right.
Yes. And then from there, you want to your ultimate goal is to take out this high to see a uptrend again. Okay. But remember,
Right.
the hand zone that you have here, it's valid, but doesn't have to hit that area, because those candlesticks here is that it's representing sell orders or sell or prices decreasing, but that's just banks faking out all these people here that are trying to buy. And now after 3 to 4 days of a rundown, they finally bought in. And now from there, once everybody sold for a loss, if they sold for a loss, of course, now they can start their real move, which is this one. And now you see on how money's coming in. Okay. The money's coming in there. Because what you saw in here before this candle, so let me just put that there. Before that candle has been presented, because again, each gray mark that you see here,
Mhm.
you can't trade that because that extended hours. Remember that. So
Right.
if I
Yeah.
just right click this and just put regular hours, where'd it go? I think it deleted.
Oh,
So
did it? Oh, wow.
let me see. Is it here? No. Oh, actually, it was here. My bad. But it
I think.
just pretty much, yeah, it just pretty much just deleted actually. So where was it here? Yeah, right.
Yeah.
Okay. That's what it was. So on the next candlestick, right, what did it give you? It gave you an engulfing, which is this one. So
Yeah.
now on a different time frame, just as what we just drew, is that we had candlesticks like this coming in, which is bearish, and then a new bullish candle like this overtaking all these little red candles,
Right.
because buying pressure just took all these sellers, and now it just delivered higher prices. Okay, so again, this is why context, aka trends, is very important, because 1, 2, and 3 or 4 days you would have not been a part of this market at all. Okay, and that right there could have been a whole week of you for no, or you yourself no trades at all for a full week until the following week, which is this candlestick. Now it gave you the uptrend. So now that it gave you that, you're gonna wait for another candlestick to confirm, and now you're entering at the break above here, stop loss below this low, and now you're going to swing this, and this is where swing trading can come in place, because you don't have to be on lower time frames. You could just work with these time frames. So look at the next candlestick. It gave you what? A pullback. Why does it pull back here? It's the same thing here. Once it makes a high, pulls right back down. That's just what happens, and you can
Right.
just continuation. So if you look at this candlestick right here, this specific candlestick, what would that show you on a different time frame? So let
It
me,
will be larger on a smaller time frame.
yeah, it'll be larger. And so you'll see something like this. So if I just drew this here, let me just draw this out for you. So if this is a sell candle and this is on how it looks. So let me just put that there. Actually, like that. So this is on how that looks right now, or this candlestick, this specific candlestick. And let me just, I want to dive into this topic real quick. Is that in this candlestick, okay, and this is what I mean also, as in this candlestick doesn't really matter to us at the end of the day, because what we go off of is structure first. Because if I'm looking at this candlestick in here, in the candlestick Bible, is showing me that this candlestick defines as a reversal. I mean, yes, it could be, but structure overcomes that in context. Okay, so context, trend, structure, and then candlestick. Okay.
Mhm.
So I'm gonna make that smaller. Oops. Right there. So context, which is the context is bullish, that's very important. The trend is going to rally up to the upside. The structure is giving me higher high, higher low, higher high, and then the candlesticks. Because the candlesticks can give me anything. Give me a doji. It can give me a big bearish engulfing. It can give me a something like this. Whatever, doesn't really matter, because what matters is my context, my trend, and my structure remains to be the same as in bullish. And then the candlesticks is I'm viewing those candlesticks on how banks are manipulating each candle, because that's what they do. They manipulate each candle on, on a certain time frame or on a certain day. Because on this day here, the moment that price delivered a big engulfing candle, yes, money's coming in. There's strong momentum. That's an engulfing candle. But in this area in here, that right there can give you a indication to go sell or sell position or to look for a downward flush. Yeah, that can occur, but we're not going off that because we're going off of this here.
Right.
Because if I dissect this candlestick, it will look something like this. And let me show you. And let me just put it in structure format because it's much more simple. In this candlestick here, you have a buyer, or actually a buyer down here and a seller up here. So think of a seller here, seller at the top, buyer at the bottom. Okay, this simple. So buyer and seller, and all they're doing is just grabbing a hammer and they're just beating this candlestick. Okay, so the seller's pushing price down and the buyer's pushing price up.
Mhm.
And how this is looking on a lower time frame will show you something like this. And then this. That is what this candlestick represents on a different time frame, okay, or on a lower time frame. Okay, I'm gonna see if I can try to go onto a lower time frame to show you that this is this, but that's just what it is. Is that price stalled for a bit, didn't really give you a big buying pressure until 3 days later, which is this one. Okay, because that is what you have in here. It stalled for a bit. It's stalled for 2 days, which is stalled for 2 days. Consolidate, 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 and then reversed, because others are using this candlestick to come right back down. But we're not going to do that. Why? Because we're going to participate with the order flow, which is context and trend and structure, to go up.
Right.
Because you see that in the upper time frame, that money is it's much more stronger. Demand is stronger than supply. There's more demand, at the moment on Apple in a specific time frame or in this specific time period to see a continuation. That's it. Because where I used to mess up a lot is just looking for sell the moment I see these downtrends. Because now I'm like, okay, I caught the top. Let's go short. But no, we don't do that, because we follow the rule. We follow the steps, the 1, 2, and 3: structure, ascending, and confirmation. But in this case, we're talking about structure much more in depth, which is context, trend, and structure. And then the candlesticks, because what candlesticks this is it's already your structure at the end of the day. So it doesn't matter that these candlestick here is giving you a whole sell indication. No, because if you look from the far left, we're still holding these swing points. You see that?
Yeah.
And so now that you have that, look at this candle. It gave you an engulfing. Okay. Now that engulfing, it's giving me a nice confluence with my trend. So now
Right.
we can use that candlestick there to see a next rally or to see a higher price. So that is on how you use those candlesticks at your disposal or at your advantage with the current structure. And that's on how you read price action. And again, you're not going to hear anywhere on that on YouTube because it could sound simple, but they just make it very complex and they just don't give it to you. Okay. Or the way that the candlestick Bible is they show you these candlesticks, but in reality, what the most important thing here is what I just drew in this little box: context, trend, and structure. And then you can use candlesticks because you're using price action to understand how money's coming in, which is those candlesticks here. Because if I was on a different time frame, on a 5 minute, 1 minute, you're going to see rallies and rallies and rallies up to the upside, which is from here was a nice sell or a nice downtrend. But now look at this day, you saw a rally up to the upside. Now people are like, oh my gosh, this is rallying up. It's seeing higher prices. But now when they see this higher price here, look at this candlestick. Look at this candlestick. Now they're like, is this going to continue? Is this going to continue? Think about this. If you think about this, 2 days of just giving you this, don't you think it's going to shake people out?
Yeah.
There you go. Yeah, of course. And now it's like within those 2 days, they're like, oh my gosh, it's not giving me the uptrend I want, but the engulfing candle is there. But now it's like on this 2 days, it's giving me this. What's going on? What's going on? What's going on? But now when they sell for a loss or they try to force a trade in this ranging structure or this ranging area, they force a trade, they're in the trade, they look for a sell the moment that it didn't continue going high, came right back down, and now they just shifted right back down and trying to go short. And what happened the third day? A big rally up to the upside. And they're like, oh man, I just sold. Why did I sell? Is because you're trying to force a trade every single day, or maybe the candlestick here shook you off. Okay, which is here. Because you can see that this candlestick, it doesn't really tell you anything. Okay. But what we do know on this candlestick is we can dive into lower time frames, again, lower time frames, to see what's really going on. So you see on how you're the one that analyzes each candlestick by time frame. Because just because it gave you this type of candlestick does not mean anything. Okay. Because let me ask you this. On this candlestick in here, what does that give you? It gives you some sort of what? It starts with an H. Ham.
Oh, hammer.
Correct.
Oh.
Right. It's like, I don't know if you watch Avengers. It's like Thor's hammer. Okay. It's like his hammer. And within that hammer, it indicates you what? Upside. But you can see on how this candlestick would have shook so many people out, because for them, it indicates what? A buy. But what happened? Sold off. Okay.
Mm.
Why did it sell off? Is because on a different time frame, this was bearish. Remember, higher low, higher high, break. It was bearish. Just because this shows you as a hammer does not mean, oh yeah, it's going to go that way. Because we don't put candlesticks first. What we put here first is context, trend, structure, and then candlesticks. Okay. Same thing here as in what we just saw right here. There's another hammer right here to go short. What happened? Pressures reverse right back up again. So the people here that are going long got stopped out. The people here that are going to continue going short, they got stopped out. So it's like buyer and then a seller. And now when they went both ways, they're like, oh, I give up. Okay, I give up because, it's like, this is pointless. But again, this is what you should be focusing on is context, trend, structure, and then candlesticks. Because the candlesticks can be your last piece, which you can apply when you're reading price. And so this is why we work with time frame by time frame to understand what those candlesticks. This is why we dissect the candlesticks, because we're not just going off the candlestick Bible. we actually dissect each candlestick on what it represents in a different picture. And,
Right.
and does that candlestick connect with my overall context, which is the bullish move? If not, then that candlestick doesn't matter to me, because that candlestick can be a manipulation candle.
Right.
So now that you have this candle here, or these two candles here, is manipulation candles. It's there for you to sell early, or it's there for you to go the wrong way, potentially, ultimately. And what happened here? It did something like this, which is this candlestick, and then reverse right back up. Okay, and let me just see if we can go into this area in here and just show you that consolidation. What is this? 2 hour? Yeah, right here. You see that?
Yes.
There you go. What I just drew right here. It's that. Okay. So you see on how this just was just ranging, and then what happened? Push up, which is this push up here, which is this wick. Remember
Well,
what?
why is that a gap? Is that a gap in there
Yeah,
though?
that's the gap because this day has closed already, right? Because this is
Oh,
already
yeah.
4 p.m. and then this is 9:30. This is another day. Okay, this is Monday. This is Tuesday.
Gotcha.
Right? Because remember, each candlestick here represents 2 hours. How many hours are in the stock market? Around 5 to 6 hours, or 6 hours. So let me just put that there. Let me just put that and highlight that.
Do the gaps have to fill though?
No,
Or
no, it doesn't. It could fill, 5%, it could fill 50%, it could fill the 100%. Okay, we really don't know how much, it could fill. Okay. Yeah, those are nice indication that if you want to add as confluence to fill, you can use that. Okay. So again, it all comes down to structure, order flow, and then those gaps. Because
right.
those gaps, candlesticks, it's like the last pieces. Okay. So Friday, let me just calculate this. This is Monday right here. From here to here. That's all Monday right there.
Okay.
Okay. Just these 1, 2, 3, just these 4 candlesticks, that's Monday. And the next day is from this candlestick, Tuesday, Wednesday, here, right there. That's all Wednesday, Tuesday and Wednesday. Just these 3 to 4 candlesticks. And now what we're on right now, it's still Wednesday, or this, Wednesday here. Monday, Tuesday. Now we're just coming into Wednesday. And there you go. So I guarantee you there was a lot of traders in here looking for shorts to target what? This gap here. Just like what you just asked, this gap. Okay. Does it have to fill? No, it doesn't. Right here. And it just continues. This is why we connect structure. Higher high, higher low. We're trying to confirm that this is higher low to make what? A higher high. Like that.
Right.
Okay. And that's just how you see continuations. And when you see continuation like that, it's just to confirm the bigger picture, which is this one. To break this one, to meet this one here. Okay. So it's like, again, let's go back. So the first step, the way that you chart is this. That's the first step.
Right. Your SSC, right?
Yeah, your S part. This is your S part. Okay. Now that you have this knocked down, and then you can add candlesticks as your last confluence. Okay. So now that you have that, you have now marked out all this. Now you're going to come into the next step, which is your supply and your demand zone. Okay. So let's just write that there. And this, again, this is what your system is going to be. Okay. So your supply and demand. And these are the only steps that you should focus on, because other than that, anything else are just going to make this very complex. Okay. So supply and demand. Supply and demand. Why do we use supply and demand? Is because we use it to see retracements into that range. We use it to see retracements, or we use it to see candlesticks to retrace. Okay, let's put it that way. Okay. We use it to see candlesticks to retrace into that range, aka your S&D. Then we want to see a bounce, or reject, depending on its direction. Okay. So these are the main key things when you approach a stock, a forex pair, or any markets. These are the steps. Okay. So context is one, or the structure is one. The S is two, and now you have your third step. Okay. So your third step would be, we can clone this real quick. Your third step would be your confirmation. How can you confirm? Confirmation. Confirmation can be wall blocks. That's one, and I teach that in the weekly webinars. Wall blocks. I also teach Wyckoff. You can see Wyckoff can be a nice, theory that you can use when price comes into your supply and demand zone to look for shorts or for buys. And also you can use fractal.
Now, I don't know what fractal is. I heard
So,
you use.
yeah, so again, it's like all this right here, fractals, VBs, or Wyckoff, it's fine. Okay, it's okay to not know at the moment, because it's like all you're doing is just understanding what 1, 2 is first. Because
Right.
now that you know 1 and 2, it's basically confirmation part. Because what is VBs, what is Wyckoff, what is fractals? It's 1 and 2 again. It's all over again.
Okay, got it.
That's it. Okay. Because when price comes into, let's just say, for example, into a zone, it pretty much it goes from step 1, which is your structure. Price comes back down into your S and D zone. So let's put it here like this. So you have your 1. So let's just put on a 1 here, and let's make that simple. So 1 here, and let's make it into the inside here, and let's make it big like that. That's 1, right? Now you have your 2 here. Let me make that inside as well. There you go. Oops, where'd it go? So 2. I think I gotta go back and do this again. So 2, center, inside. Let's do 20. Okay. There you go. So you have your 1 and 2. Remember, you're waiting for the candlesticks to come back down into your number 2. And what do we want to see in, in this supply zone, which is number 2, is we want to see the stoppage in price, which is those candlestick decrease in sell. Okay, this is very important. Okay, you want to see those candlesticks decrease in selling pressure, and you want to see something like this. You want to see something like this, like that. That is what you want to see.
Got it.
Okay. So that is what you want to see as in when price comes into your supply and demand zone, which is number 2. And this is where your confirmation comes in, is that you can use vault blocks, which is your main structure. Again, what I say by vault blocks is lower low, lower low, lower low. This low is coming from the previous candle. This is your vault block. That's 1. Look at this. And you can just see that what we're doing inside the supply and demand zone, your confirmation is just 1 and 2 all over again, because you're looking at the structure shift from bearish back to bullish again. And inside of that area, you can look for mini supply and demand zones to go long. Okay. So all it is you want to see price come back down into the demand zone or the supply zone, and then reverse right back up. Okay. Because in this case, this is bullish. This is a bullish order flow, because you're using the demand zones to see a bounce, not a rejection. Because rejection is the opposite way. It's the price coming to that zone and then fall. So think of a demand zone like a trampoline. You go on the trampoline, you bounce. And supplies, and so a supply zone, think of it like a roof or a ceiling. You hit your head on the ceiling, and then you reject right back down.
Right.
Okay. But in this case, you're just throwing candlesticks into that trampoline to bounce right back up. And now you just see on how price just coming right back up. And that's just what we did on NAS 100, remember? But it's the opposite way, right? because on NAS 100, it was something like this. It was a sell. It was a sell, a supply zone. And in this case, you see on how this one's just bearish, but in this case, this was bullish. Now it's the opposite way.
Right.
Bullish. Now you have this. There you go. Demand, supply. And that's all comes down to your first step. Okay. So remember, this is your first step. Your second step is here, which is here. And all you're doing here is to look for your confirmation. How you confirm is you're either vol block, Wyckoff, fractals. But again, this is your last step. We're not worried about this because once you know 1 and 2, confirmation is going to be the simple part. Okay. This is where a lot of people, get lost at, is their last step. But all in all, the third step is just your 1 and 2 all over again inside of a supply and demand zone.
Got it.
Okay.